stuttering a little bit here. 44% of cyber claims are actually denied by carriers. And we just had a recent one, which was the city of Hamilton, Ontario, had a claim for $18.3 million. And it was actually denied because they didn't have MFA that they said they had when they applied for the insurance. So it wasn't fully deployed. You said you had it.
I'm Chris Engler with Engler IT. You're listening to the Cyber Brisket Podcast. I specialize in IT and cybersecurity with over 25 years of experience and a team at the forefront of innovation. Our guests let us know what's hot in IT and how to keep your business from getting cooked. Please welcome Kevin Ishizu. Kevin brings more than 25 years of insurance industry expertise and is widely recognized as a pioneer in the cyber insurance market. He played a key role in launching one of the first cyber insurance products with Lloyd's of London and Stanford Research Institute. Most recently, Kevin leads Telivy, a cybersecurity risk assessment company acquired by Citricom, where he helps organizations bridge the gap between technical security and insurance requirements. As founder of Executive Risk Analytics, he advises clients on strategies that have driven multiple unicorn successes. And he has held senior leadership roles at firms including Willis Towers Watson, Wells Fargo Insurance, and Arthur J. Gallagher. Wow. Kevin, you had to be one of the most credentialed person that I've ever had the pleasure of speaking with. So welcome to the Cyber Brisket Podcast.
Yeah, Chris, thanks for having me. Yeah, really interesting background where, starting in insurance in kind of like the mid 90s and then going through the dot-com boom of the 99, 2000 kind of era. Um, Being out here in San Francisco, we really saw kind of the who's who of technology in the Bay Area and had some clients that actually now are kind of like the largest companies in the world. So it's amazing to think that they've transitioned from, kind of these fledgling technology companies to being these massive global behemoths that we see today. But yeah, a lot of our early work was, trying to place insurance and complicated insurance. It was cyber insurance and it was directors and officers insurance for a company called Yahoo. And we had to work very closely with the legal team, the general counsel at the time, and it was going through all the different verticals that they were, kind of launching as fledgling ideas on that platform, and trying to figure out how do you ensure that. They make a misstatement, they publish something in error, they provide a service. There was just no products even close to what they needed, and we had to build everything manually from scratch.
Wow, super impressive. So I've got a few questions for you here. You've been at the forefront of creating the cyber insurance market. How have you seen the relationship between cybersecurity posture and insurance requirements evolve over the years?
Yeah, no, that's a really interesting one because we went from not really understanding how to underwrite this space, and it was really, kind of throwing things against the wall to see if it stuck. I think the insurance carriers, Lloyd's has always been known for its innovation, and so that was a great place to start. I don't want to get in too much detail, but a non-admitted market versus admitted market has a lot more flexibility and creativity. They don't have to file their policies with every state in the US. So it's much faster to get these creative ideas and coverages to market. And so that's a great place to start. And that's where we, really focused a lot of these ideas. But without having, kind of a track record, right, a history of losses, right? I mean, when you're insuring cargo, you kind of know statistically how many ships go down per year, how many storms arise, and you can predict weather patterns and times of year that these ships are launching. You just couldn't do that with cyber. Like nobody had any idea what to do in that space. So a lot of it was trial and error, but we really focused on understanding internal policies and procedures. And it was primarily at that point called information security. So how are you protecting, right, your physical information and your digital information that was, expanding rapidly at the time. So we would ask a lot of questions about that. And I think we were very biased by really good underwriting results because the companies that were willing to pay for cyber insurance, one, understood and could better quantify the risk that they had, knew the impact and that the survivability of these fledgling ideas and technology had to have insurance. I mean, that's one of the beauties of insurance is that it can protect creativity and innovation. You can take chances, maybe stumble a couple of times and still make it. And a lot of these companies did that. So understanding that these companies were more risk adverse, understood the risk, had better policies and procedures, but just probably had better corporate governance around them. So if something was violated within the organization, they did the right thing, right? They would, notify the employee, they'd notify the management team, they'd notify all the way up to the board of directors at some point. And change course, right? Put in, better policies and procedures. Enforce those policies and procedures with the employee that might have violated them. And we couldn't see that texture behind the scenes. And so I think that's the evolution, right? Is that we've now gone from something where you could apply for insurance on an attestation, um, where later as companies started to buy cyber insurance, they weren't as risk adverse. They didn't have that corporate governance in place. We were asking the questions, having the right responses, but not getting deep enough into the conversation. And now we are. So now the industry is looking for things like screenshots of the tools that you're telling us you use to make sure that they're in place and being enforced.
Great. So small businesses often struggle to understand how cyber risk translates into insurance coverage. What's the most common misconception that you encounter?
Yeah, I think, I can't put it on the most common. I'd like to give you a handful because I think they're all going to resonate with, kind of your viewers and things that we hear. I mean, I think that the first one is I'm too small to be the victim of a hacker.
Sure.
And I think that mindset is just the wrong place to start because, my next door neighbor is he's a contractor. He does, spec houses and stuff like that. And, he's got a great business, but it's him and it's one assistant and then he subs everything out like a lot of these folks do. Um, he got, his secretary got, tricked into sending $45,000 to a fictitious bank account or an errant bank account, and they struggled to get money back. They did some things that actually got them sued by Wells Fargo Bank, and I don't want to get into the details, but when you have an adverse event like that, and you're making quick decisions to protect and survive, they did something, right? And instructed a bank to wire money and pull money out of Wells Fargo, which technically they're not allowed to do, but they did it. They reversed the ABA or whatever that transaction was. And Wells Fargo actually filed a lawsuit against them. So you would think Wells Fargo would be like, wow, we've got a client and a customer using our bank account who is committing fraud. You would think they would focus there first, but they didn't. They went after my neighbor and sued him. So not only was he out the money, he's getting sued by Wells Fargo. He's trying to fix his infrastructure. So a one person or a two-person shop, getting hit, tells me that everybody is at risk. So I think that's kind of like number one. There's a statistic out there, I don't know how true it is, but that 60% of small to mid-sized businesses, after a material adverse event, are out of business. And so I think that the idea here is that, if there are certain risks, you want to find out early and you want to understand. I think that what I, kind of recommend, and it's an enterprise risk management term or it's an accounting term, is materiality threshold. So if something happens to your financial records, you suffer a loss because of a fire, flood, earthquake, employee theft, and if it's, a $25,000 threshold and you're going to struggle to survive, But we, in partnership with your team, Chris, run some analytics and we see that, starting risk is at 90,000 and goes up to 2.4 million. We have to have a conversation about that risk mitigation and risk transfer, because the percentages, right? And I think to put this maybe into better user terms, like we all start buying life insurance at a certain age. You buy a house, you buy fire insurance, you're buying auto insurance, you've got healthcare. A lot of times the odds of these cyber events are higher than insurance policies that your customers and your prospects are buying personally or for their business. Right. So they're all looking at certain insurance products, but they just don't think cyber is frequent and severe enough, I would assume, right, to warrant a look at, mitigating that risk and really helping understand that risk. And I think that's an issue. And then I'd give you one more, and I think that's that all policies are the same. And I might even fit in there, I have other insurance that's going to protect me. And so you'll hear a lot of that from like an attorney who tells you, I have a malpractice policy. And that's fantastic. And that malpractice policy will pay for that breach of confidentiality. Right. So they lose their customers' information, or a hacker posts it all online, and there's an embarrassment, a damage to reputation, but they get sued by one or more customers after that happens because their, personal information and private and confidential information are posted. So yeah, your professional liability is going to pay you once that lawsuit is filed. So one, you got to be sued. If you had cyber insurance, that would start protecting you from the minute you understood you had the event. So they're going to help you mitigate and reduce that risk. So, a lot of lawyers think that they're covered, and I'm not going to say that they aren't, but they're not going to have coverage for reputational risk, credit monitoring, notification costs. They'll also cover some of the liability and the regulatory, fines and penalties. But you're not going to get the forensics, right? Crisis response, all those things that could help you even reduce the probability of you getting that lawsuit for breach of confidentiality. So I think that's one of the things I would focus on. And then hitting a little bit about all policies are the same. We'll see one policy that has $1 million limit or aggregate, and everyone assumes that they've got $1 million of coverage, but there are these micro limits or sublimits, as they're called. And so they restrict the amount that you might have for funds transfer fraud or for ransomware, or for other events that the underwriter doesn't understand well enough to give you that full limit, or don't think the protections are there for that full limit. So that's one big difference between policies, and that's an easy one to check. But a harder one to check is, um, how do you define your network? Are you covered when you're working remotely because you're not on your network? Are you covered when you work from home because you're not on your corporate network? Are you covered if you log in using your personal cell phone or your personal desktop or laptop? So BYOD is defined differently on every single policy. The network definition is defined different on every single policy. Exclusions are one thing, and you see an exclusion section and you're like, okay, I can understand these and I can get comfortable with them. Very few people look at the broader terms and conditions of the policy. And I'll give you an example. There's a carrier out of Lloyd's called Click for Cover, or CFC. And the second to last paragraph of the entire policy is an exclusion if you have a critical vulnerability that hasn't been patched in over 90 days. And you have to understand that, one, what is a critical vulnerability? You and I understand what that is. Your viewer might not. These are things that are tracked and measured by, the U.S. government under NIST. The severity of these things is quantified and qualified. And you also make attestations that you're patching, right? So, we're patching and we do this routinely, maybe on a monthly, quarterly basis. So the carrier has a couple of outs, right? One is you misrepresented yourself on the application because we can see vulnerabilities that are over 90 days or over, right, the amount of time that you stated. So clearly you misstated your patching policies and procedures, or you don't enforce them. So they could actually invalidate the entire contract, regardless of whether that vulnerability was the source of the event, the adverse event. And then if it was the source of the adverse event, you could also have an exclusion where they can very easily push the burden of proof onto the policyholder. And that's why the exclusion is there, right? They can just say not covered and then force the applicant, right, to file a lawsuit against a carrier like Chubb or AIG, like you really want to go into battle with a company that size. Um, or they could rescind the policy, but that puts the burden of proof on them to show that you did misrepresent yourself in the application. So the exclusion or a term condition that acts like an exclusion, all has to be understood.
Yeah, I think that's a misconception that I think many of us hear about a lot, where folks think they have coverage for one thing or another, and then there ends up being some kind of a technicality that makes it out of scope of being insured.
Yeah, exactly. And I'll give you a statistic. 44, I need to slow down here. Sorry, all your viewers there. I'm stuttering a little bit here. 44% of cyber claims are actually denied by carriers. And we just had a recent one, which was the city of Hamilton, Ontario, had a claim for $18.3 million. And it was actually denied because they didn't have MFA that they said they had when they applied for the insurance. So it wasn't fully deployed. You said you had it. You said it was deployed. You said you're using it in a variety of different ways. And it just, sometimes that's not, it doesn't happen that way. If you don't mind, I can actually post a link to that article. So let me see if I can put that in the chat for folks to jump on. Don't do it now. You're supposed to be watching the podcast, but keep that URL and go check it out because there's actually some of the things that I'm going to talk about are actually in this article as well. And so I think it's one of those things just to take a look at and kind of as reinforcement to some of the things that we're going to talk about here today, Chris.
Yeah, we'll be sure to make sure for the audience that the link is accessible on the subsequent blog post that is created as a result of this podcast. So we'll see it there, and we'll make sure it's linked. So that, yeah, we are always digging up articles almost on a weekly basis about folks that are major institutions, whether they're municipal or private commercial enterprises, where they'll suffer a breach, and then there'll be a claim that's denied for a number of reasons. And usually it's because the organization is not doing what they said that they were doing.
Right.
Whether it's like you already said, having a critical vulnerability that hasn't been patched, whether they're not using MFA, or in some cases using a very simple password.
Right. Right. Yep. No, very well said. And I think we're starting to see that where insurance started with attestations made within an application, and now it's definitely changing to more evidence-based. Show us screenshots that you're doing what you say you're doing. I want to see the controls, and I want to see them deployed on every endpoint for all employees. We're getting to that point, and I think that we're going to start to see of more of that where you have to continue to adhere to those attestations, right, and controls that you say you have, and show evidence of that routinely throughout the policy period. So I think we're going to go there, and in fact, we're there on the enterprise level for sure.
Yeah, we're seeing it every year. Our clients collaborate with us or ask for advisement from us for their cybersecurity questionnaire, and we know that thing just gets more and more in depth every year. More questions, and like you said, more evidence of what you say you're doing.
Yeah, and I think that I just want to like kind of talk a little bit about that because the insurance applications are written typically by insurance people. And so they've gone through a legal review, they've gone through an underwriting review, and the technical review is probably where they lack a little bit, right? Who do they have on staff that can talk to them about, right, the technologies that are being deployed? And so
Right.
the questions oftentimes either are really poorly written, intentionally or unintentionally, but sometimes you need to add an addendum and you need to work with somebody like you, Chris, where you understand that you can't accurately answer a question on an application because they have compensating controls or they're using a different technology that accomplishes and does more than what that policy is asking for. And so you've got to give that texture, because if you don't, you've actually misrepresented yourself, right? So you say you've got a 5-year-old technology that the application is looking for, but you've got actually, and you say yes to that, but you've got a better compensating control than that. You've actually misstated yourself or misrepresented yourself. So unless you put
Mm.
that addendum on your application, that you've got something better, um, you've actually misrepresented where you are, in your security stack. So it's important to involve, you're right, folks like you, on that application review.
Wow. Huge tip right there for everybody watching. All right. I got another question for you. With
Mhm.
your experience bridging technical security and underwriting, what key factors do insurers look for today when assessing cyber risk?
Yeah, it's a really good question, and I think where we're going is, kind of more towards that zero trust environment. So, I think that's really where we're kind of going there. So, folks are looking at, backups. So we're not just looking for an attestation of backups or that we rely on our cloud environment to back up, right? So underwriters want to make sure that
Microsoft
those.
is doing it for us.
Right, exactly right. So we want to make sure, and the underwriting space wants to make sure there's an immutable backup, right? And you're following kind of, and you could talk more about this, but that 3-2-1
Yeah.
rule. So you've got, three, copies, you're using multiple media types, and you have one copy that is offsite, offline, and can't be, right, poached by a hacker, right, deploying ransomware tools. So there's some stats out there, excuse me, um, that 94% of ransomware attacks really target the backups, right? They know that they have to have those to make sure that they're going to get paid. And so they've got to be focusing on those backups. So others are probably less sophisticated, attacks, or, they're willing just to damage, the reputation, right? And hope that they can get some cash out of it. But if they're going after backups, we know that's a high percentage. We need to make sure that those are, encrypted, right? They're offsite, offline, and something that you can rely upon to rebuild, infrastructure. So we're seeing that. We used to see a lot of questions like, hey, are you using MFA? Do you have EDR? And those are great questions to ask. Do we deploy MFA at all admin levels? Do we have it for everybody for email and critical business infrastructure? Those are great, kind of tools to have. But now, underwriters, especially at the enterprise and mid-sized companies, they're looking for like a FIDO2 type 2FA or multi MFA. So they're really looking to make sure that we've got like a encrypted public key with biometrics or tokenization, right? And so that's kind of at that enterprise level, but you can kind of see where it's going. EDR, it's great that you have it, but understand that you could actually impact, right, the insurance and the underwriting if you're willing to share, and you do share some of the logs and screenshots. Like, when did EDR isolate an endpoint or a device, right? So is it being used successfully?
Yeah,
And the
is it just something that you're paying for, or is it actually doing something?
Correct. Yeah. So the more that we can show that these are in place, mitigating that human risk, right, if you will, and it's actually doing, what its intended cause is, then in that underwriting process, you should get some benefits in terms of premiums and coverages.
Very good. How do you see the role of risk assessments changing as AI and automation become more integrated into cybersecurity and insurance processes?
Yeah, no, that's a really great question. I would just, highly encourage everyone to actually do the risk assessment. So let's let's start there and do a risk assessment. We've got at Telivy, we have two different tools. One that can look at your external perimeter, and that's a fast, kind of easy analysis, and it's very similar to a scan that the insurance carriers are going to do. So I think recommendation number one is, before you apply for that insurance, make sure you do that external scan and see any deficiencies that that underwriter is going to see because they're going to dock you for it. Doing that broader risk assessment, and I like to, kind of liken it to, where you're at a mechanic and your car, and the mechanic comes out and he's like, hey, yeah, there's some dents here, there's some chip paint, some rust, and usually that means the engine's in disrepair. We've got to hook this up and do some analytics on the engine. I'd say that's very similar. We run that external scan. We see the dents and the chip paint and the rust, but actually deploying other tools to see, what's in that local environment, the vulnerabilities, and where employees might be violating internal policies and procedures. We want to see that. The role of AI from a hacker perspective is to look at multiple sources instantaneously, run multiple attack vectors, analyze what vulnerabilities might exist in that environment, and see if they have an exploit for it. So they're doing that much faster, which means that our risk assessments need to be run more routinely. So there's a lot of frameworks. Well, every framework kind of says you should do a routine risk assessment. Some make it mandatory, but what does routine mean? And you'll see that word used in like FTC safeguards. And how do you define that? People say, oh, well, if you're a, large multinational or a large national or super regional CPA firm, routine means quarterly. Well, I don't know that. Yeah, and it doesn't say that, but as a practitioner, people will say, oh, that means quarterly or that means annually. But I think with the risk of AI, as a tool for hackers, we've got to be doing this more routinely. So is that a monthly? Is it tools that scan continuously and protect you? So a lot of these zero trust MXDR, tools are going to protect you continuously, 24/7 and look for these things in closed doors. So I think we really need to make sure that we're transitioning from, thinking of, hey, my engagement with Engler IT is for my IT needs. We've got to be thinking my engagement with Engler IT also includes cybersecurity tools and solutions to make sure that I move towards kind of that zero trust because human errors behind, I don't know, the statistics vary from 70 to 85% of vulnerabilities or I'm sorry, of material adverse events is because of human error, right?
Wow.
So we've got to be kind of making that progression away from just IT thoughts, and what are the best cybersecurity tools for my industry, for the size of my company, um, for how we market ourselves and do our outreach. So talk about your business plan, right? Talk about the business divisions that you have. Talk about mergers, acquisitions. What are you doing out there? New marketing campaigns, right? All those types of things and tools that are out there. Use of a lot of AI tools that are coming in, right, to companies today that can make your customers and prospects far more efficient, create openings, right, in the web. And so you've got to understand what tools are being deployed, so you can look at how these things integrate with each other. A lot of these tools integrate to others. So just think about how your calendar and your email interact with a lot of third-party tools. I mean, it does. And so each one of those might have a different admin role and folks that say, oh, I need this for marketing and I need to integrate it. So now your marketing team has admin access into your email. And right, I mean, those are things that we need to understand, and you better understanding that and the tools that are needed to make sure that we've got segmentation, right, to secure that marketing team, from being able to get into an email exploit into your accounting team. So how do you bridge those things? I think is what folks need to be talking about, and understanding that there are some very simple steps, but you need to have that communication with your staff, right, to make sure that folks can be protected from those integrations.
And thank you, Kevin. And I just want to speak briefly for the sake of the audience so that they can have a better understanding of what we mean by zero trust. And so a little backstory in cybersecurity is that there was a time when we used to protect the borders of our systems, and we had a very strong border. And then once you were on the network, there wasn't a whole lot to stop you from going from one place to another. And when we talk about zero trust, we're talking about not just having a strong border, but having also strong walls inside that border, so that if someone does get in, or if a bad actor, or if somebody is making a mistake somewhere in the company, they can't mess up things too bad, because we do have other barriers in place inside the organization.
Yeah, no,
And
that's
so,
a great description, and definitely something that folks need to be thinking about of all sizes, because it's simple to deploy, right? But it comes with communication to understand the risk, right? So understanding how that company is structured allows you to do your job there.
yes.
Yeah,
And and to what you started out saying, or at least the first point that you jumped on, was doing the risk assessment. And I want to let everybody know, everyone that's listening, that we do have a strong relationship with Telivy. You can get your complimentary instant external cyber risk scan, vulnerability scan on our website. So if you go to englerit.com, that's englerit.com, you can click on a button, type in a few metrics about yourself and your business, and you'll have within 2 minutes, I would say maybe even sooner, a full risk assessment report, giving you a lot of useful and actionable insights that you can use to improve your cyber posture. And if you have any questions about that, you can reach out to us and we can help you understand what that report means. Very
yeah, no.
good.
Again, I think that's something that everybody should understand. And I think what is not really well known is that um, anybody can do these and focus on your client and your prospects environment. So they're tools that underwriters use for not just underwriting cyber or technology errors and emissions coverage, but they also use it for professional liability. So I'm picking on those lawyers out there, but you CPAs, you doctors, dentists, all fall under this, where you have an obligation to keep your customers' information secure. And so if a professional liability underwriter isn't looking at digital access to that data, then they're not doing their job completely. So they are using these scans. We're seeing financial lenders use these scans because I mentioned before, 60% of the SMB are out of business, right, within 6 to 12 months after an adverse event. So
Wow.
you're obviously not going to repay your small business loan if you're out of business. So they
Sure.
need to be underwriting that. And then if you're at a company that provides services to others, whether that's legal services or other services to other high-powered people or companies, there are companies that will do critical vendor risk assessments. So if you're doing services or business with another company, you might have already been under the crosshairs of these scans and paying a higher premium, a higher interest rate, or weaker terms conditions contractually because of these, and you don't even know it. So it's a quick, easy step. Chris is offering these things, gratis, and he'll give you some time so that you better understand it. So there's really no reason for you not to do these scans.
Thanks, Kevin. I got one last question for you here.
Mhm.
If a small business wanted to make itself more insurable from a cyber perspective, what three actions would you recommend they take immediately?
Yeah, I think we've covered a bunch of these things, right? So doing that external scan and understanding your kind of that what does your external perimeter look like? And then working with your team to mitigate and harden that exterior would be number one. Doing that risk assessment would be very powerful because what you will see in doing that risk assessment is a lot of the policies and procedures that these companies have and compared to other peers. So how do they rank from other peers? We're going to find, vulnerabilities. So if they haven't been patching, right, does that match the attestations they're making in the application? We talked about that already, right? Where deploying MFA, if I just simply say, yes, we have MFA, and I'm going to check all these boxes because I think we do, you're going to lose coverage. You're paying premium for for a limit that's never going to deploy to your benefit. So if you do that risk assessment, you're going to see whether or not folks are using MFA. You're going to see whether or not your employees are encrypting files locally. You're going to see whether or not they're pulling information out of your cloud environment and keeping it on their desktop. So they've got patient records, sales logs, all kinds of information. We could actually help, right, companies do that risk assessment and then see that PII, right, that personally identifiable information that resides locally and is in violation of the policies and procedures. But more importantly, the attestations you made to that insurance carrier. Well, I shouldn't say more importantly, because we want to make sure you reduce, right, your risk to being hacked and the damage if you are hacked. Um, so those are some things that I think that risk assessment and that external scan can accomplish is a better insight into whether or not your employees are adhering to internal controls procedures. Now, some things that I think really kind of help, the ability to get cyber insurance. A lot of folks, like if you are in the services industry, if you have strong contractual language that provides a nice hold harmless, excuse me, hold harmless or, indemnity agreements and things like that. Go ahead and share those with the underwriter because I think those are important. If you do a risk assessment with Chris and his team, and he does a lot of the remediation work, be willing to share that 30, 60, 90-day action plan so that they can see that the intention within your corporation is to be risk adverse and that you actually have a remediation plan in place to get there. Those are very powerful. We talked about, attestation moving towards evidence-based. Be willing to take screenshots of those tools and share them, in that underwriting packet. Show that the backups, right, do follow that 3-2-1 protocol. Incident response, everyone has that question. But make sure that you're testing it, right? And that's working properly and everyone knows what they need to do in that incident. I think the other and where the industry is going and going really fast is not just that you do security awareness training and phishing exercises, and that's going to be asked on just about every cyber insurance application. But if you can show that your enforcement and governance, right, of these is there, right? So if somebody fails at phishing, what do you do? Do you push another 30-minute segment, of training to them? That's typically seen as not being very effective. When you work with Chris, he'll be able to better be able to tell you like the quality of the passwords that they're using internally. And so some things that you could do is make sure that that user has more sophisticated passwords. You can see whether or not they're using MFA at logins, and you can enforce them to do these things. You can, provide a better, as Chris was describing under zero trust, you could put a better box around that employee so that they can't do damage to other networks. So remove some of their access and things like that. Are they, encrypting information on their desktop, or are they, pulling information from the cloud? I mean, all these things can be seen through that risk assessment. And it's more about how are you enforcing your policies and procedures. So it's that corporate governance step that if you share with the underwriter, you're going to get some credits as well from that. So I think those are some of the benefits. And then certainly when you're using, kind of like a phishing resistant MFA. So we talked about that FIDO2. There's a lot of carriers are offering, 10 to 30% discounts in premium when you're using a tool like that. So when you start thinking about whether or not you can work with your broker to get a decrease in your insurance premium, that offsets a superior security tool and the cost of that, it might be really worthwhile for you. So those are some things that I would, kind of throw out there in terms of suggestions that you could actually help pay, right, for these security tools, have a more secure environment, but have some of the savings from your insurance offset those costs.
Wow, Kevin, you are always a huge wealth of knowledge, and had been absolutely a pleasure speaking with you today. I thank you very much for your time.
Yeah, Chris, great to be here. Thanks for having me.
You're listening to the Cyber Brisket Podcast, what's hot in IT and how to keep your business from getting cooked.